going on, guys? Zach here from iTrendz, coming to you guys with a brand new video. Today we are going to be looking at how to identify support and resistances and supply and demand zones. Essentially the same thing, but we're going to be going in how do I actually identify them. We don't want to be one of those YouTubers that makes you wait until the end to identify. So really, in a quick note, all you're looking for is areas of consolidation or basing. They're the same thing. You're just looking for when a stock goes like this, moves up, bases, and then continues. That's where your support and resistance levels are. So with that being said, we're actually going to get right into the video. I'm going to take you into the charts. First, I want to show you something from our learning center. We're about to drop this inside of our Discord, which is really, really exciting because this is about, as you can see, 57 pages here. As you can see, 57 pages here of just straight knowledge. We're going over trading basics. We go over options basics. We go over market structure. We go over profit management. We go over random stuff, just miscellaneous things in there, little tidbits, little tips and tricks. So this is really, really exciting. We're dropping that in the Discord this week. So hopefully that'll be up. It's going to be really, really nice. Towards the end of the week for everybody in our premium service. If you guys would like to check it out, feel free to check out the link in the description to join the Discord. We also host weekly, 2 times a week market prep sessions, which are free to everybody. We open the live up to everybody. Feel free to join those if you are not a premium subscriber of ours. So let's just take a look at this really quickly, this graphic right here. Markets really only move in 2 ways. They either are basing and continuing, or they're reversing, right? So it's either continuation or a reversal, right? So you either have a rally, a base, and then a rally, or a drop, base, drop, or you either have a rally, base, drop, or a drop, base, rally. So either a continuation or a reversal, right? Continuation or reversal. Those are the only 2 ways that the market moves. Of course, the third being the basing in between, the ranging in between. But generally speaking, you want to be trading a trending market. Ranging markets kind of can suck. So let's move down a little bit here. Hopefully this is really good and easy to visualize, makes it easier to visualize how to identify support and resistance and supply demand zones. Really all we're looking for is that base. That's it. We're looking for the consolidation zone. That's literally it. So this makes it easy for us as traders because we really just look, I don't want to say easy. I don't really like to throw that term around, but it really does make it easy because all we're looking for here is just a basing. We're just looking for consolidation. And then that's where we can draw and take from, or we can take our demand zone or our supply zone and then work off of that, our support and our resistance. So as you can see here, we have a few graphics where we have a rally, base, rally. And inside of the base, there's this consolidation zone, and then a drop, base, drop. Inside of the base, there's a consolidation zone, and then again, rally, base, drop, and then drop, base, rally, right? Just the 4 things we just saw here, this is what it looks like in real life with candlesticks, right? So what we're looking for here is consolidation. You might be asking, what is consolidation? Well, consolidation is when you have a string of candles that are not really moving from a general range. So it might be between just arbitrarily $4 and $5 on a stock. It just trades in between there, and then either breaks above or breaks down below. That's your consolidation zone. So that's what we're looking at here. We're looking at these bases, right? So the market pushes up in this example, comes to a resistance area, consolidates a little bit before breaking back down. That's your supply zone. That's where sellers are. In other words, that's your resistance area, right? Or you have the stock trending down, pulling back down to the support zone, or in other words, the demand zone, where you begin to see this consolidation and then a breakout to the upside. So it's very, very nice, and it's very easy. Again, I don't like to throw that around, that term, but it's easier when you break it down to the simple basics of we're just looking for consolidation. We're just looking for basing. It's just going to be consolidating in literally a specific area. So let's bring up Trading View here. Let's just take a look at some stocks here. Let's actually go to let's go to the 1 hour. We are on the 1 hour right now. Actually, this is perfect. And let's go to, this is easy right here. There's quite a few different areas of consolidation. So this is actually today. So this, you can see that we're not in replay mode. We're not in the past. This is actually today's price action. Today is the 4th of October. We had quite a big rally off these lows here. It's actually been pretty crazy. Some nice upside trades today. So let's just start marking up some areas of consolidation, right? If you recall, we had a drop base rally, and then we also had drop base drop, but we also had, sorry, these are just kind of quick, rally base rally. and rally-based drop. So what we're going to be looking for in this upside trending market right here is a rally-based rally, right? We're looking for the bases inside of this rally-based rally. So I just kind of gave you a hint. You can see that there's some consolidation here. There's some consolidation here. And what we want to do always when we're trying to identify support and resistance is we always want to look left. So always look left. Looking left is going to help confirm that that is an area of support or resistance for you. You're going to see it being used as support or resistance in the past. So let's do that. So we see this consolidation here. So let's just mark it, right? And I like to use the bodies of candles when I'm marking support and resistance. This is just my personal preference. A lot of traders take on this as well. But you need to figure out what works for you. If you like including wicks or trading wicks, then that's your own trading style. Make sure that it fits your trading style, right? So let's just bring it to the left here. Boom. So we have this consolidation area right where the market had pushed up from this level, consolidated in here, and then you can see a continuation push here. So we're going to mark this and then bring it to the left. You can see that this was an area of resistance. You can see this is the consolidation area. This is an area of resistance. This was where it passed through, right? No real area of resistance right here, but you can see this is consolidation, consolidation, consolidation being used as support right here. A little dip below, but consolidation. We've got consolidation all along this level here. So what's really interesting to see, let's see if we actually can find something on the left side of the chart if we just bring this all the way over. Yeah, sure enough, some more consolidation in here. We get some consolidation before a continuation, rocket off of this support zone, support, support, support. So as you can see, looking left really makes things a little bit, again, I don't like to use this word, but a little bit easier when you're trying to identify support and resistance, because it's going to show up time and time again. If that support or resistance, or in other words, if that demand or supply zone is really strong, you're going to see it show up in the chart. So look left and it'll help you identify that, right? Always look left, as we just identified. So let's just keep going here and let's identify some other zones. Let's just focus on this previous area right here that we bounced off of today, right? So let's just mark it and let's look to the left, right? So this is our nice little zone. Oops, getting a little big here. So here's another consolidation zone. What can we see here? We can see consolidation, consolidation, resistance, resistance, support, support, support. So this is another area of consolidation. This is another basing area. Therefore, you can conclude that this is an area of support or resistance depending on where you are in the chart. If you're above it, it's considered support. And if we were below it, if we went back in time to yesterday, this would be resistance right here. We broke through resistance and then we actually used it intraday as support. So speaking of intraday, let's actually drop to intraday so we can give you guys a little bit of an example about how to identify these intraday. So we're going to be looking for the same exact thing. So we're going to be looking for areas of consolidation, same exact thing, just a smaller time frame. So there's going to be more of them, right? So if we just use the area consolidation that we identified, this is the area consolidation that was formed during pre-market. Now we're above it. So this is going to be used as support. So as you come back down to it, what's going to happen? You're going to come back down and bounce back off, right? So we can see that this area consolidation was used as support over here. And then we know, because on our higher time frame, we look to the left, that it was used as support and resistance previously. So this is a really strong area that, say you didn't get to see any of this long action here. Once you come back down in the zone, since this 2-day trend is up here and we haven't hit our top resistance levels yet, well, yeah, I'm going to take some longs off of this support as we dip back into here, as the buyers are going to come back into the market. And then sure enough, it pushed back up. And we actually had a lovely trade on Meta today, which we will get into. I'm also going to, after I record this video, record a trading recap on that. So stay tuned for that. But let's just identify some more zones on the day. So one, we had lots and lots of resistance, 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 resistance. You can see that ultimately this entire area is a big area of resistance. Like, you don't really want to be trading inside of this area necessarily, but you can also see the major difference here. If you guys are struggling to actually see it, you can see that inside of, that wasn't really helpful. I tried to change the color. So inside of this area, this is an impulsive move. There's not much consolidation going on here. These are 5-minute candlesticks. So there's a little bit of consolidation going on here, but ultimately the move is up, right? This move is up off the support zone, and then it's starting to form a resistance area, in which this was a nice little short back down to the support area, given that you do have a little bit more risk being that the 2-day trend is up here. But with that being said, we are in a downtrend. So people that took shorts out of this area definitely got greatly rewarded. However, again, it came with a little bit more risk because this immense buying pressure that we're having in the market right now. Right. So you see that also, I just want to point this out that it's interesting to note that on the left side over here, you have big impulse move, consolidation for resistance area. And then once you break that resistance and actually are heading back down to your next support, it's also a nice impulsive move to the downside. That's how the market moves. Consolidates, impulses, consolidates, impulses, consolidates, impulses. You guys get the point. So we looked at it earlier. Hopefully this is making sense. Now we're just visualizing it, right? So now let's go to, honestly, let's just do Meta. Let's go to Meta because this was a great little trade and that we had here. So what we're going to want to do, always zoom out, right? Zoom out, actualize, and zoom in, and then actualize. That's what we have. That's one of our sayings here at iTrendz. So Meta is a little interesting here. So I'd actually been watching this setup since last week. The reason why I was watching it is because you see we have this really drawn out falling wedge in a downtrend. You can see there's a big falling wedge in a downtrend that kind of gives a better visualization to it. This kind of spreads it out a little bit. But what I was watching for was a break above and then a retest and take off the retest and then continue back above, right? I am looking for it to trade back towards this 148-ish area. I was not looking for the specific trade that we took today for it to do that. Obviously, that's a big move. That's a swing position. We were trading this as a day trade. So my point remains that I was watching this falling wedge here. So any strength in the market, any break above retest, I'm comfortable taking calls off the retest. So that's exactly what we did. So let's identify some areas of resistance or support, or in other words, let's identify some areas of consolidation. So we can just take the obvious area of consolidation, which is this low. Let's change the color back here. Area consolidation down here. You can see that this is where we load, bounced, big bounce up, came back, uses support, bounce up, uses support again, right? Okay. One thing I do want to say about Meta is that it has huge tendencies to reverse off of its support and resistance areas, or in other words, its demand and supply zones. So let's identify our next area of consolidation here. Well, we can see that there's a lot of consolidation and then move down and then consolidation, right? This is pretty choppy. This overall area is really choppy here. However, what you can see a little easily is that you have this support here. And if you go across to this gap, which we just formed overnight, which is also happening to be the break above this resistance level of the falling wedge. So we've got some confluence here. This is a strong area of support, right? This was our resistance. We broke out of that resistance. So when we come back down to support using our confluence in QQQ, if we're in support of that same area, then I'm taking my longs there. So let's go to the 5-minute. Let's extend this bad boy. We actually entered literally right here. It was a perfect snipe. So we entered right here off of our bounce, the resistance from yesterday, and also the gap fill. So this was gap filling. The market was very strong today. So on any pullback, I was looking to enter some calls. I didn't get to see as much of the upside in the market yesterday. I really didn't like that. I wanted to be a participant in the upside of the market this time. So I was really eyeing stocks that had strong reversal potential, like Meta, as we just saw with the falling wedge in a downtrend, which is a bullish reversal pattern. A little bit tricky to trade, but it is a bullish reversal pattern. And I was looking to buy calls low and then sell them high, right? Cliche, but buy low, sell high, right? So we picked up our calls. We actually picked up 143 calls at $1.47. The high on them was $2.53. It was an amazing $100 per contract trade. I actually also picked up 143s as well. Excuse me, 144s as well. I doubled up. I picked up 144s and 143s. The 144s went from, I bought them at $1.06. I sold them at $1.50 because I didn't want to be too far out of the money, but they went to $2.02. So this is just a note that, and this is for everybody, but for the people in our premium service as well, when we give call outs and maybe the contract, $1.50 was maybe too expensive, right? The 143s were $1.47. So maybe that's a little too expensive. Feel free to go a little bit further, a couple strikes further out of the money. Just make sure that you're not going too far out of the money when you're trading options, because we don't want to do that. But you can see that you had an amazing gain. You still had $100 per contract gain on the 144 strikes, even though you took on a little bit more risk being a little bit further out of the money. it was still almost the same exact amount. So it was really a good trade. But anyway, back to the main point here. We identified our area of consolidation. Let's identify another area of consolidation. That's obviously this pre-market high that we had here. We had lots of consolidation in here. I even want to stretch this out and show you that we have a little bit of consolidation right here as well. And then a little bit of consolidation right here as well. So there's lots and lots of consolidation all throughout this chart right here. The rest of the day was very, very choppy. We really just took advantage of this bounce right here, and it was very nice. So we took our nice calls off of here. I took my first take profits inside of this area because I could see that we consolidated here right at open. So I did not want to have us fail this area and then come all the way back down. I took some profits in this area. It was a nice 25% sell point. We actually blew right through it. I took some profits inside of here because we had more consolidation inside of this zone. I took some more profits inside of here. And then as soon as we got towards this wick here on the high of day, I just took all of my contracts off. And that was actually a great move here because we didn't end up continuing and pushing greater towards the 145 area. So this was a great trade, but hopefully this is making sense. Let's use another example here. Let's just go to a random stock. Let's go to Amazon and let's go on the 5-minute channel. So again, when we're looking to identify support and resistances, we're looking for areas of consolidation, right? Areas of consolidation is what we're looking for. And we're looking for support and resistances, right? Support and resistance, supply and demand, right? So if I'm going to type that out for you guys. Supply equals resistance and demand equals support. Oops, sorry. Demand. Sorry, I spelled that totally wrong. So demand equals support, supply equals resistance. So we're looking for areas of consolidation. So let's just look for the obvious high and the obvious low on the day. Well, that's right here. So you can see, okay, there's lots of resistance right here. What happened? We pushed all the way up into this 122.68 area, rejected back down, pushed back up 122.96, rejected back down, rejection again. And then once we tried to break again, we rejected once again inside of this zone. So what must this be? Must be an area of sellers, which is an area of resistance, which is an area of supply. Excuse me. So now let's look for an overall demand. Well, you have big demand inside of here. We can't even get back down here. But what you can also identify in between here is this period of consolidation before we actually broke out. So let's just label this and go to the right here. You can see that we use this area as support, even going into close here. So this area is a big area of support and a big area of demand, or in other words, there's lots of buyers in this area. So hopefully this made a lot of sense to you guys on how to identify support and resistances. All you're looking for is areas of consolidation and areas of basing. Once again, let's just take a look at this again. This graphic is honestly super easy to identify, or super easy to visualize what it's like to identify areas of consolidation and areas of support and resistance. So hopefully you guys learned a lot from this video. This has been Zach from iTrendz. Feel free to check out the links in the description below. It has our Discord, our free trading journal that you guys should definitely download. It's free. And we also have a couple other free items on the site. Feel free to check that out. But thank you guys for watching. Hopefully you guys enjoyed the video. Please leave a like and a subscription if you did. This has been Zach with iTrendz, and I will see you in the next one.